Well, what a wild week it has been. The Fed raised interest rates, but mortgage rates fell. And we just heard that we had our second consecutive quarter of negative GDP. But are we actually in a recession? Hi, this is Andrew with the S2 Real Estate team here in Frisco, Texas. I just want to spend a few minutes with you today and try and make sense of all of this and what exactly it means for the housing market. So, as I just mentioned, the Fed raised interest rates again last week, but mortgage rates fell. And a lot of people don't understand how that can actually happen. And the truth of the matter is the Fed doesn't actually control mortgage rates. It can only influence them. And I'm not going to get into all monetary policy here today, but when the Fed raises interest rates like they did last week, it's going to affect, personal loans, car loans, furniture, credit cards, things like that. Mortgage rates are actually tied to the 30-year mortgage rates are actually tied to the 10-year treasury bond. So, in essence, whenever there's economic uncertainty, you usually see more money pour into the bond market, and that actually directly impacts the mortgage rate. So the market actually responded to the Fed raising interest rates in a positive manner, which actually caused mortgage rates to drop some. At the end of last week, they were averaging about 5.3%. So you'll remember not long ago, they had jumped all the way up into the sixes, and now they have settled back down. So, with that in mind, it brings me to the next question about a recession, which seems to be a little bit of a political football, to be honest with you, because are we in a recession or are we not in a recession? Right. So, technically, normally, two consecutive quarters of negative GDP would indicate that we're in a recession. We've just had two consecutive quarters of negative GDP, but a recession hasn't been called yet. So if you go to the technical definition from the National Bureau of Economic Research, who actually calls these things, and when they define a recession, it is said it's a significant decline in economic activity spread across the economy lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, etc. So, hence, whether or not we're in a recession to a certain extent depends on which party you want to believe, right? So, we definitely had two consecutive quarters of negative GDP. But the argument against calling this a recession is it a significant decline in economic activity overall, considering wage growth is still there, employment is still really low, and the economy isn't showing a whole lot of traditional signs of weakness. But the headlines are out there, talking about Americans are very concerned about recession. Investors are worried about recession. CEOs of top companies are worried about recession. And the bottom line is, it's basically got people nervous. They're not sure what to do, especially as it comes to the housing market. So, what does all of this mean, and how does it impact you if you're considering buying or selling a home right now? So first and foremost, it's important to understand that homes in general are bought and sold based on life events, not economic ones, unless you are, an institutional investor, or you've got laid off and you don't have a job and you can no longer afford the home. But in general, that's not what we're seeing right now. And overall, people have a tendency to buy and sell when they have to. People get married, they have a baby, they need a larger home. They have to downsize, job relocation, something along those lines. And that isn't changing now just because of the economy. And the question becomes is it a good time to consider buying or selling? And I'm not going to tell you that yes, you should buy or no, you shouldn't, or yes, you should sell or no, you shouldn't, because I don't know. Only you can make that decision for you, but just a little food for thought. So, from the buy side, right? I mean, the biggest challenge buyers have had over the past year and a half, especially, is the fact that there was nothing to buy. you had an incredible amount of demand for homes and very small supply. As a result, you have multiple offers. You had bidding wars, and buyers got fatigued. They got burnt out. We had several say, "We can't do it anymore." Right? That's gone. So if you were one of those people to put your plans on hold, now's not actually a bad time. Prices are holding steady. You can actually negotiate for a home. You don't have to make an offer on the first day. You don't have to waive appraisal and all of your other contingencies. You can do inspections. You can negotiate repairs, basically back to normal. So from the buy side, that's not bad, right? Yes, are mortgage rates higher? They certainly are. So you're going to need to check with your mortgage professional to find out exactly what you can comfortably afford right now. But a lot of sellers, and especially new home builders, are offering incentives, and they'll actually buy that interest rate down for you, right? So you can actually get a rate, possibly in the mid fours. Not bad historically at all. No, it's not in the high twos. No, it's not 3%. And if you're holding out for those rates to come back, you might be waiting a really long time because it doesn't look as though those are coming back, if ever, to be honest with you. From a seller's perspective, one of the challenges sellers had previously is if they put their home up for sale, what were they going to buy? There was nothing for sale. So they were concerned about being homeless. And with the fact that homes were going up in value each and every week or virtually every day, sellers were hanging on, hanging on, hanging on. And certain sellers right now, they're seeing that that's not the case, right? So there's a little bit of a reality shock come into play for sellers quickly here when suddenly their homes sit on the market longer. Suddenly they're not getting 50 showings in the first weekend and they're not getting inundated with offers. It's a more traditional market, but prices are still holding. So it begs the question, are prices going to go down? Some say yes, some say no. Nobody knows for sure. I can tell you that. We are seeing things settle down. Overall, year over year, we're still seeing price growth, but it looks as though things are going to go fairly flat. And could prices decline? They could, but much of it's going to depend upon where you live. Here in the Frisco and Prosper area, we're seeing quite a lot of price resilience. We have, not anywhere near the amount of inventory we need. And this is still a market that is growing ridiculously fast. We still have an awful lot of people and companies moving into this area, which is helping to drive the real estate market forward. So again, that decision on what to do is a personal one. Only you can make it. But if you have questions about that, reach out. Stay in touch with this channel. Hit the subscribe button and or hit the bell notification as well to be notified whenever I put a new video out. And just understand that even if we are technically in a recession, that's not necessarily bad news for the housing market. If you look at the last 5 recessions, interest rates have actually fallen, mortgage rates, I should say, have actually fallen by an average of 1.8 percentage points during that time. And in most of the past recessions, home prices have not been negatively affected. 2008 was the asterisk. That was the exception to the rule when prices fell. But other than that, prices have pretty much been flat or actually gone up during recessionary periods. So again, hopefully that helps a little bit. The best decision to make is the best one for you and whatever your situation is. But if you have additional questions or you'd like additional information, Troy or I would be more than happy to talk to you. So feel free to give us a call. You can reach us at 469-296-5230 or send an email to contact@s2realestateteam.com.